is still on the front burner. Many Nigerians are really feeling the impact of the adjustment in the prices of petrol across the country, because the template that we have right now from 488 naira in Lagos to about 537 naira here in Abuja, and far north the price gets to 557. How do we really understand the conundrum of fuel or petrol subsidy, as it were, in Nigeria? My guest will be joining me shortly. After the news, I would also be talking about investment outlook in Nigeria. For those of you that have invested your money, or you've put your money where your mouth is, will you still get returns on investment? And what is the outlook, especially as we have a new administration? My guest also is standing by virtually to join me right after the news, but let's quickly take the business headlines. The removal of subsidy on petrol in the country, the Nigerian National Petroleum Company Limited is set to discontinue crude oil swap in favor of cash payment for petrol imports. The Group Chief Executive Officer, Mele Kyari, revealed that the country's plan to eliminate crude for petrol swap will end as soon as local refining capacity improves this year, with government refineries, Dangote Refinery, as well as modular refineries coming on stream. The Organization of Petroleum Exporting Countries, OPEC, and its allies have agreed to cut global production by 1.93 million barrels per day, reducing Nigeria's oil production quota by 20.7%. According to the new production schedule agreed upon in the virtual meeting on Sunday, Nigeria's quota will decrease to 1.38 million barrels per day from January to December 2024. Saudi Arabia says it will make significant production cuts in July as part of a larger output limiting OPEC Plus deal, as the group faces flagging oil prices and a looming supply cut. Saudi's Energy Minister Prince Abdulaziz has said on Sunday the cut of 1 million barrels per day by Riyadh could be extended beyond July if needed. OPEC Plus, which groups the Organization of the Petroleum Exporting Countries and its allies, reached a deal on output policy after 7 hours of deliberation, and decided to reduce overall production targets from 2024 by a further total of 1.4 million barrels per day.
As we have done in April, whereby the countries that had agreed to do the voluntary cuts have extended that voluntary cuts to end of 24. Clear, we as a cluster of 23 countries, we will do whatever it is necessary to bring stability to this market.
During this year, the voluntary cut remains. During 2024, we set the ground for a new methodology that will bring more visibility and certainty as to how do we assign those levels of cut for the different countries.
Further, we, as the United Arab Emirates, have joined the voluntary cut for the year 2024. We thank the Kingdom of Saudi Arabia for the extra.
President Joe Biden on Saturday signed a bill that suspends the U.S. government's $31.4 trillion debt ceiling and VAT in what could have been a first ever default with just 2 days to spare. The House of Representatives and the Senate passed the legislation last week after Biden and the House of Representatives Speaker Kevin McCarthy reached an agreement following tense negotiations. The Treasury Department warned it could be unable to pay all its bills if Congress had failed to act on the document.
Function is through compromise and consensus. And that's what I work to do as your president. to forge bipartisan agreement where it's possible and where it's needed. Passing this budget agreement was critical. The stakes could not have been higher. If we had failed to reach an agreement on the budget, there were extreme voices threatening to take America for the first time in our 247-year history into default on our national debt. Nothing would have been more irresponsible. I want to commend Speaker McCarthy. He and I, and our teams, we were able to get along, get things done. We were straightforward with one another, completely honest with one another, respectful with one another. Both sides operated in good faith. Both sides kept their word. I want to thank the members of Congress who voted to pass this agreement, which I'm going to sign tomorrow and become a law. Thank you.
The recent surge in prices of petrol across the country will worsen the country's cost of living as households struggle to keep up with the rising costs of goods and services. Since the removal of petrol subsidy, commuters, marketers, and other business owners have continued to lament the current cost of living in the country. Moneyline with Nancy took to a market survey as some Nigerians had this to say.
Over the past years, Nigerians have been struggling to afford basic needs and desperately seeking financial support as inflation erodes household incomes. On Monday, May 29, President Bola Tinubu announced during his inaugural speech the removal of first subsidy. This situation has worsened as many Nigerians continue to lament. Moneyline with Nancy took a market survey to find out how these hiking prices affect goods in the market.
For example, Indomie used to be 4,000 naira. As I'm talking to you, it's 4,200. Rice used to be 38,000. We are selling for 42,000 now.
But we are buying tomatoes basket from market before it's 40,000. But now we are buying it 45,000. We are selling this basket 4,000 before, and now we are selling it 5,000. Even pay SAP, even add money. As we are selling it before 1,000, and now we are selling it 2,000.
They also live like the bunch. Normally, the ID price is 1,000 naira. Today, market price 1,500. Yesterday, we even got it for 1,800. So, teenagers fluctuating between 1,500 and 1,800.
It's too much now. Person where they grant something for me. I got this money. He said granted now 200. I asked him why. He said now because of fuel.
Just to bring the fuel down, that's it. Bring the fuel down if it's possible. That's the only way out. If it's down, things will be down. Yes, because production, some of them use fuel. You know how it is in Nigeria. No lie, they use fuel and everything to do. By the time they're done, they add their expenses in one place and bring it to us. And we too add.
If I buy higher, I'm going to sell higher. That one is constant. I'm not going to sell below cost price. So except the fuel price is being kind of reduced or being regulated. That is the new norm now.
I say I want government put fuel as the normal price.
It is pertinent that the government intensify efforts to relieve Nigerians of this burden by adequately rechanneling funds into better investments to improve the lives of Nigerians.
From the Buhari administration to the Bola Ahmed Tinubu's administration resulted in a 5.2% increase in Nigeria's stock market. And this is the highest first-day stock market gain since 1999, according to historical data. For last week, interbank market rates fell noticeably owing to the continued strength of systems liquidity, which was boosted by inflows by the Central Bank of Nigeria. Meanwhile, analysts anticipating cautious trading in market positions ahead of Wednesday's NTB's auction. In the FGN's bonds market, there is a clear preference for buying interest in both short-term and long-term maturities. Analysts are predicting that demand for similar trends will remain strong this week. Last week, Naira's value against the dollar fell by 3 basis points to 464.67 kobo to $1 at the I&E window. This Monday, global markets from the United States to Asia and Europe opened firmly in the green territory on all output cut news by OPEC+. All right, let's quickly, I'll take a break, and when we come back from the break, my first guest will be joining me. Kenneth Brai, who is the head asset management, Commercio Partners Asset Management. We will be talking about investment outlook. What do you do with your money right now? Do you even have money? But for people that have invested, will their money still bring in adequate returns? President Tinubu's inaugural speech renewed hope Are we really seeing light at the end of the tunnel? What are we seeing in the horizon? Kenneth will be speaking to me from his crystal ball in case he sees anything. All that will be after the break, and we will also take a look at the petrol subsidy controversy, the conundrum. What are the issues? Really, my guest would also be talking about that. Engineer Barry Simone, the founder and chief executive officer of Crossstream Group. All that ahead. But let's take this break. We'll be right back. Welcome back to the program. In case you're just joining us now, Kenneth Bry, the head asset management, Commercial Partners Asset Management, is joining me right now from Lagos. Hello, Kenneth, and welcome to the show.
Good morning, Nancy. Thank you for having me.
Now, let's get yes. Now, let's get started. Kenneth, speak to me from your crystal ball. What has been happening, at least since the result of the last election was declared? What are sentiments of investors right now? We do have a new president now, perhaps just a week old right now. Speak to me about the sentiments of investors.
Okay, thank you very much. So we are coming from a time where investors were sitting on the sidelines. They were sitting on the sidelines. For them, there was quite a number of uncertainties regarding the elections, regarding what will happen on the swearing day. And we saw foreign participation drop from the January levels to around about 8%. Compared to the domestic participation, which was much higher. And what we saw in the first trading week within the inauguration by the new president was a resounding pause by local investors. And this, they demonstrated their vote of confidence in the rally we saw in the Nigerian stock markets across board. If you, from the slides earlier, we could see that the market rallied. Week to date, as of last week, was around 5.37%, and this was stocks across board, from the financials to oil and gas to the consumer goods. So across board, the president's market-centric policies were greeted with a vote of confidence by investors. So that was what transpired in the week.
For investors, was there a sense of optimism from what Mr. President Bola Ahmed Tinubu mentioned at the Eagle Square last Monday in terms of perhaps interest rates, anti-people and anti-business? How did you and your colleagues in the asset management space digested that? And what are investors also telling you? If there's what kind of sense did they make from the inaugural speech?
So for institutional for institutional investors, even HNIs, which we deal with, what has been happening before now, where investors were on the sidelines. But we had some sort of cautious optimism. The policies which was rolled out in the speech by the president was very reassuring of issues which should have been dealt with before now. The president talked about unifying the exchange rate, taxation. We talked about foreign direct investment. And if you've been following the news, you will know that one of the things that are keeping the foreign investors on the sideline has been FX restrictions. So people invest, and when it's time to take out their funds, they can't take out. They can't do that. Just about this time last year, Morgan Stanley Capital International did announce that we are going to put Nigeria on the sidelines because, in terms of the index, and this was because FX restrictions was not helping the fate of the foreign direct investors. Also, on the local side, what has been worrying has been the health of the Nigerian economy. For the Eurobonds market, we have seen before now several downgrades. We have seen the December to March, we saw downgrades of the Nigerian sovereign rating. And this was a result of the crisis for subsidy issue, which you mentioned. We talked about the dwindling revenues of government, as well as the huge debt burden. So these were some of the issues which the speech touched on. And for investors, this was a vote of confidence. It was a sign that they were moving gradually from a more restrictive to a market-driven environment. And that was a boost for confidence. And it bodes well for investable assets in Nigeria.
Thank you for speaking about, of course, those ratings agencies like Moody's and Co. At least in the last few months, we saw some of them, or a few of them rather, or one or two really, are downgrading Nigeria's ranking. Do you see, because of Tinubu's assumption right now into office, and perhaps is saying what the markets would like to hear, do you see a change in that in the next few months?
I think the president started first in his first week in office, tackling the elephant in the room. That's fuel subsidy. And the second one, which he talked about, was unifying the exchange rate. So across the three rating reports, Fitch, Moody's, and S&P, what we see across board was one, the issue of dwindling FX reserves, Nigerians' debt burden, and the issue of fuel subsidies. Those are issues we have been resounding in our rating reports for some time now. Then another issue is the issue of oil theft, because oil production levels have been dropping. And for example, when JP Morgan last year took out Nigeria from its overweight category because we missed out on the gains from the Russian-Ukraine war. Price surge. You saw today that OPEC has already revised our production quota to around 1.3 or 1.7. So it means that we have missed out completely. So President Tinubu looked at critical issues. He looked at subsidy. He looked at with the security agencies which had the meeting, the issue of security, as well as the issue of oil theft. So I feel that these are critical issues which would force a rate reversal in the next rating review cycle by end of this rating agencies.
Okay, let's take a look at private investors and not institutional investors right now. Where should private investors put their money? Because from your own analysis earlier, people were really sitting on the fence. So where should people put their money right now in an environment where there is high inflation, 22.22% as of April, and we don't know, of course, there's a likelihood it will go higher. We shouldn't just even say we don't know, because the handwritings are there on the wall right now with this price adjustment of petrol across the country with a GDP data of 2.31%. Where should investors really keep their money? Also bearing in mind that the stock market has also posted, or at least companies listed on the exchange have posted seemingly good earnings. Some are also paying, some paid or are still in the process of paying good dividends. So I don't know what you're advising your clients right now. Just talk to me about what you're telling them. Should one still bring in their money?
Yes, I would say that most of the uncertainties are actually out of the way. So investors who have been on the sideline, and this is now the opportunity to pick, especially on the stock market, stocks which have been undervalued for some time. If you look at Nigerian banks compared to their peers in Southern Africa, you find out that they are trading at a very discounted level. These are opportunities to pick some of these opportunities. We saw only last week one of the reasons why the banking tickers rallied was because over time they have been undervalued. So banking is a very critical area. Secondly, the oil and gas, some of the oil majors who benefit from the subsidy, because what it means is that the ceiling on their margins have been. So the big time players who have the capacity to import, store the product, and the logistics to move the products across the country are the ones who will benefit. So this, and then when you look at the consumer goods sectors, maybe will be constrained by the drop in disposable income of their customers in the short term, but in the long term, we see some cost savings for them in terms of the sourcing raw materials for their production, especially those who are importing, because of there will be more exchange rates more available for them to import. These are some of the areas which we have been talking to investors on. Aside from we'll be looking at Eurobonds, the opportunities also for Nigerian sovereigns.
Okay, Mr. Breyer, I did listen to you. Out of these categories of investment, which one holds the brighter? Which one is brighter? Should one go for equities? Should one go for, of course, Eurobonds, or even the fixed income market, as it were?
Well, as we always tell clients, usually which kind of investment you came to should be tied to your risk appetite. So it will depend on the client's risk appetite. But for investors who are bullish, I would say any day I will go for the equities market.
Investors who are bullish, I didn't get you. Investors who are bullish, where should they go to?
Investors who are bullish, who have a very high risk appetite, I would say should go for investments in the equities market.
Okay. Finally, what's your short, mid, and long-term outlook for Nigeria's investment space? Because I also know that, for example, in Nigeria's stock market, we have more of domestic investors now, at least, you know. But what's your short-term, mid to long-term outlook? Your bullish posture this morning on this show, is it for short-term? Is it for mid-term? Is it for long-term? Speak to me about that.
Okay, thank you. Being bullish, I would say my outlook so far is our outlook is one of cautious optimism. We are optimistic about the long term. We see that there will be challenges in the short term because, one, implementing all these policies will take some sort of pain. And that's what we are seeing with the domino effect of the oil subsidy removal. Inflationary pressures will go through the roof in the interim before we start seeing some gains. Then we know that the administration is at the formative stage. We need to see the cabinets going forward. That would tell us what the kind of personnel the president is bringing on board to drive the economic agenda, and this would further will take us to the midterm where we will have more confidence. So when we see if it's a more technocrat-driven cabinet, we know that they will have a higher chance of the policies which the presidents have talked about, how to attract foreign direct investments, how to solve the problem of refine the exchange rate, how to look at interest rates. These are the critical areas which would now translate into our long-term outlook. But in the short term, we see some challenges. In the mid-term, we see some depending on the cabinet of the president, we see some hope, while we are bullish in the market.
Okay, final question for you. Has it been difficult for you, when I mean for you, for your firm, also for your colleagues in the asset management space, to be able to gather liquidity from investors? Do you see that as a challenge moving forward? That, of course, there's higher inflation now. Petrol subsidy it's seemingly off. We're paying higher, triple prices right now for petrol. How difficult is it for you in your space right now to convince people to invest? Because people will say, we don't even have enough money for disposable funds, let alone investing. How be it that investing is also necessary?
Okay, like I said in my intro speech, for HNI investors, they are mostly likely been sitting on the sidelines. They have been looking at how the event is leading to the inauguration will play out. We have crossed that step down. So we just started bouncing ideas across them just last week. For retail investors, which we have several products which in that space. That's where we feel that in the interim, the reduction in their disposable income would impact our ability to draw investments from them. I was listening to your show over last week. You were talking about how much you have to pay for petrol. I feel that every conversations are coming across the country. Everybody's looking at how the welfare subsidy has impacted their income. And that, if we are praising that further, we'll now look at how much they have on this. So we see that in the
All right, thank you very much, Mr. Bry. Thank you. I know the same way I said on the show last week, I didn't know you were listening, that I spent, in fact, the money I spent to fill up my tank was triple. And you can imagine it's the same story for everyone. But thank you very much for joining us today. Let's talk again soon. I wish you a lovely week.
And you too. Thank you for having me.
All right. All right, let's quickly take a break. And when we return, we will delve into the topical issue of the moment, petrol subsidy removal. Do we really understand that? Okay, let's take a break. When we come back from the break, we'll continue that conversation with my guest, Engineer Barry Simone, who is the founder and the Chief Executive Officer at Crossstream Group. All right, welcome back to the program. Engineer Barry Simone, founder, chief executive officer at Crossstream Group, is joining me right now. We're still talking about this petrol subsidy conundrum. Welcome to you, engineer. Thanks for joining us on the show today.
Thank you for having me.
Now, let's get straight to business. Where should I even start now? I wanted to talk about the history, but we all know the history. Guys, if we have the card on at least the other presidents and the fuel hikes, we can take that. What we were able to do, the research, that's it, guys. The petrol hikes since 1999, at least you have an idea from what you're seeing on the screen right now, from President Obasanjo to President Buhari that just left, and for Bola Ahmed Tinubu, we're having different prices for different, for different prices for the same product across the country. Of course, even during Buhari, we were told, we know petrol will sell for a certain price in Lagos, a bit cheaper than Abuja, but in other parts of the country, it will be like 50 naira or 100 naira more. But Engineer Simone is right here with us. Can you really, because I know you're also in the sector, make us understand this petrol subsidy conundrum, really?
Thank you very much. There has been this issue of whether there is subsidy or not, whether it's just a scam or not. The truth of the matter is that there is a subsidy. There is subsidy in petroleum products sales in Nigeria. That's a fact. But whether it should be sustained or eliminated is a matter of policy. How government wants to look at the welfare of the citizens. I recall in 2012, when there was a massive protest against the government of the day that wanted to remove the subsidy. And people claimed that it was a major fraud and there was no subsidy at all. The government that succeeded that particular government in 2015 actually spearheaded such a protest, only to come in and realize that it's not as simple as this thought. Yes, there are a lot of challenges with the implementation of the subsidy that is given. And it has to do with the transparency of the parties concerned. The party, in fact, in this particular matter is NNPC and the associated subsidiaries. And I argued, actually, that particular time, the government has not focused on the main challenge of connivance of constituted authorities in encouraging the scam that was at that point. Because it wasn't easy for anybody to bring in petroleum products without passing through a chain of security systems. The MPA, the Navy, the customs, and all that. And if you kept on chasing the trader and leaving the policeman, you're only wasting your time, because the trader must mutate to survive. And if he doesn't have the connivance of the police along the line, when I say the police, I mean the regulatory agencies, if there is no connivance, he will not succeed. So there was a major connivance with those agencies, and nobody ever talked about that. Nobody ever investigated them. How were they able to be there and these things will pass through? No, but there was an investigation that was even led by Ike Mokwede, the former chief executive officer of Access Bank at the time, the fuel verification committee or whatever. The thing is, we also know that I think there are also some cases in court as we speak right now. We saw some briefcase marketers. Those were mentioned at that time. I want to ask you, do you think, because people are still saying, okay, there's a scam there, there are transparency issues there right now. Do you think that there is still a scam going on? Bearing in mind that NNPC is also the sole importer, as it were, because after that, what we were now given was that, okay, let NNPC, which is a government agency, handle this. But NNPC will come to tell, anything NNPC tells us now is what we do, what we take. And because of that, NNPC has not been remitting money. It will has not been remitting money, giving money to central bank for the past, perhaps, God knows, 2 years or so, because they're supposed to be making monthly allocation in FX to the central bank.
and he's not been doing that, and perhaps even FAC. So where does that leave us?
Thank you. Incidentally, I was on board the program when Ike Makwade investigated the panel, and I appeared before those panels.
Oh.
Yes, it was covered live.
Yeah.
I was on, I also appeared before the Senate committee, also before the House of Rep committee, exhaustively. I found that apart from Ike Makwade's committee, the Senate committee and the House of Rep committee were not genuinely interested in identifying the challenges to solve the problem. It became a political issue. Some of them decided to make even money out of that, to join what they thought they were excluded from. I'm sure we still remember the case of one honorable that had an issue with her. So those were the kind of things that happened at that time. Now the issue simply is this. We are facing the challenges of neglect. Government has neglected this particular aspect of the industry that directly touches on the citizens, the last mile, the fuel in your car. All the PIA has come in, so many things on Nigerian content thing, but I tell people, more importantly, we need to be sincere with our intention. Nigeria has been a net importer of petroleum products for a very long time. This is not the first time. Net importer of petroleum products. That's number one. Number two, our internal refining capacity, the volume allocated for internal refining capacity, is part of our OPEC quota. It's not gotten different from our OPEC quota. So when you hear about OPEC quota, our internal refining capacity is deducted from there. So it's the net that we take to the market to sell.
That's the remainder.
The remainder. I'm not sure.
That means we're even shortchanging ourselves, as it were.
That is the position.
Yes.
Because talking about strategy to get out of this finally, you must understand this. There's a structural deficiency in the whole system. Now, like I argued at a point somewhere, I said, we should be talking about in downstream industry in Nigeria, we should be more or less talking about foreign content, not local content. Because it has been local content 100% all the while. NNPC and Nigerians control downstream 100%. And that's why we have the challenge in the country. That's how the 4 refineries were run down. It's under 100% local content. So there's something fundamentally wrong. That somebody needs to sit down and look at it properly and say, where are we getting it wrong? Most of the nations that produce crude oil refine crude oil as well. Nigeria used to refine in the past. Our total refining capacity is about 440,000 barrels per day. And it's come down to 0. And whenever you import petroleum products, it's an international product. You have no control over the price. The pricing is through what we call Platts system. And Platts is an international pricing system based on Rotterdam, London, Singapore. So if you subject yourself to such international product trade, you can but take the consequences back to your country, and the consequences is increase in price.
Now, with what you've just said right now, because everyone is now depending on the Messiah Dangote Refinery, and I'm taking it with a bit of, I'm looking back and saying, okay, everything, all these things everyone is saying, no, it's the silver bullet, it's the silver bullet. When something is too good to be true to, you've got to investigate. Is Dangote Refinery going to be that silver bullet? Because it's going to, has capacity of 650,000 barrels per day, capacity for petrol, at least he can give us that. My worry is also the issue of monopoly, just like we've also seen the Dangote in the cement area, that Dangote, and if he decides that price of cement will go up today, he decides that, of course, there are a few other players.
He only needs to talk to 1 or 2 people.
Yes, and
they move their prices.
The price goes up, because we saw that, I think, in the last 2 years or so. I'm not saying that we should discourage private investment, but I'm saying that is that silver bullet Dangote Refinery. What can we also do to our refineries? Are they totally now moribund? I understand that so much billions of dollars have also gone into that place. The NNPC GCEO said I think in the last 2 days, that crude for petrol swap will end this year, based on Dangote Refinery
coming on stream,
modular refineries, and the government refineries also coming back because there's rehabilitation. So what's your view?
Please, there are so many myths around the petroleum refining industry in Nigeria, of where the Dangote issue comes in, and you mentioned about the modular refineries. By the way, I need to correct that impression. Each time we talk about modular refinery, there is no refining technology called modular refinery. Modularization is a construction technology, not a refining technology. What they talk about, the proper name for it actually is a skid-mounted refinery. That's the one you can pick and drop. And they call it modular.
Not as complicated as the other refineries that we see.
Yes, it has its own challenges. It has its own limitations.
Yes, exactly.
Gross limitations, actually.
Yeah. Issues of pollution and all that.
Not even that. The best you can get out of it is extremely limited. Yes, because of the nature of our crude stream, the best you can get from that unit operates on a refining principle called topping unit. Topping unit. Straight distillation. Sometimes people talk about the illegal refineries in Niger Delta and all that. It's the same principle. It's basically a topping unit principle. Put heat onto a crude and get out the topping. That's the meaning. And that topping, you can't get PMS from there. Our challenge is PMS. Diesel has long been deregulated. Kerosene has been deregulated. What you can get from such small units are diesel. So when they talk about proliferation, bring modular refinery and all that, it will not touch on the soul of the nation, which is PMS volume output in the country. So we can look at that. We have suggestions on what the country needs to do to be able to address all those things. Now, to specifically go to your question about the support Dangote Refinery will give to the system, of course the support will be very welcome, and it will assist in some way, but I do not believe it's a silver bullet as people are expecting. One has not asked himself, why is there no other person across the globe over the decades that has built that capacity refinery? There's a reason for that.
There's energy transition.
And that's later event. Yeah, okay. No, that's not even the main issue. Okay. The main issue is that you can't put all your eggs in one basket, the common saying. If, for example, he wants to shut down the single train for maintenance, where will we get product from? So if you have money to deploy 650,000 barrels, it makes sense to break them into units and achieve the same total. The way Nigerian government has 445 spread over 4 refineries. So to put all of them as a one train, and when there's a shutdown, when there's a challenge, everything will wait until you fix it. But if you have spread it around here and there, when this one is down, the other one can supplement. So for me, that's a fundamental planning issue. He is a businessman.
But this is a one-man business.
That's why he's a businessman. Yes. He would have done his analysis, and he knows
and
why.
He may not have that kind of funds to be able to have Dangote Refinery Lagos, Dangote Refinery so places.
Why not? He doesn't have to have it another place.
Okay, yeah, he can actually.
Yeah, he doesn't have to have it. It can be within the same site.
Yes.
But configured differently. After all, Port Harcourt Refinery has 2
refineries.
One is 60,000 barrels, the other one is 150,000 barrels. Combined is 210,000 barrels per day. It's a strategy in industrial development. You must have a strategy to be able to deal with challenge time. So the point here is this. When Dangote comes on stream, and from what we had an agreement with NNPC, the NNPC investment is to enable him access crude oil from NNPC. It's part of the investment strategy. So assuming that NNPC funds him 650,000 barrels every day, I'm sure you heard this morning that OPEC has come and with a slashed. Yeah. So our OPEC put on is about 1.38. Subtract 650 out of that. What do we have left?
Another 650.
Now, assuming for the purpose of this discussion that Port Harcourt Refinery comes on and it's still around 10,000 barrels, subtract it from the balance. What do you have?
About 400 or so.
That's all you are taking to international market. To end all the effects, you need to run our imports.
And that's not enough.
How can it be enough?
That's not enough.
You can punch calculator and know the exact amount that will be. Nobody has thought about this, that we're still
not sufficient.
I see, if you sell a monkey and buy a dog, you have a squatting animal still in your house. Haven't solved the problem. So trying to be able to deal with this issue of internal refining capacity, you must also know that it's part of your OPEC quota.
Okay. Director is telling me we need to go, but let's use 1 more minute to ask you the question. What should the government strategy be now to alleviate the suffering of people? NLC has given a notice for a strike action for Wednesday. What should be the strategy of government now?
For me, I think there's a window for the government to retract their steps. If I understand that the approval from the previous government was to the end of June. Strategically, I would have expected that he will make the announcement that by the end of June, there won't be subsidy. So he will use the month to engage with organized labor and discuss all issues before that particular date. A sudden pull of the plug, of course, we know what he has elicited. So I think that's the first thing to do, to revisit that, use the window he has, probably to say, okay, we will talk till the end of June when there is no more provision by law for subsidy, and then I can help at that point. So whatever negotiations and discussions should be able to be concluded before that, it will be easier for people to take it. I believe that. However, on the terms of the general solution to this malaise, we need to reconfigure our refining strategy. There are products crude products that are not OPEC regulated, that we still export, from where we can distill and get PMS while maintaining our export volume. That's where I think that we should start looking at.
Okay, I think we'll leave this conversation for now. We'll continue on another day. Let's see what happens. But thank you for your insights this morning.
Thank you very much.
Thank you very much.
Thank you for having me.
I've been speaking with Engineer Barry Simone, who is the founder and chief executive officer at Crossstream Group. We've been talking about the fuel subsidy conundrum. That's the much we can take on today's edition of the program. Please join me again, same time tomorrow on the station. Be the best you can be and be the change that you want to see. I am Nancy Najee.